Hey guys, Keltner here. Welcome back to another Trading Edge video. We have only one thing to take a look at this week, so we are going to lock in, and that one thing is going to be on gold. And I'm going to answer a common question that I get about how to trade and specifically get out of a trade for profit, hopefully, when we are dealing with a trade that is at all-time highs. My apologies for the energy being a little bit low. I just watched Team USA lose yet another soccer match, and I'm a little bit bummed. So I want to distract myself a little bit by making you this video. So we ended the week with more negative news for the dollar, and we've seen dollar weakness. And with that, we've also seen strength on gold as we get more and more clues that we're likely to see a rate cut, a week from now, whenever the 17th is. I think next, not this week coming up, but the week after that. And you can see here on the chart in front of you, gold has broken out of this wedge pattern, and we are at all-time highs. Now, typically when you see me look at trading opportunities on this channel, I'm using previous levels of structure as target areas for me to take out my profit. However, when we're in a situation like this where we have nothing but open bluish black space, well, obviously we can't use structure, so we have to use an alternative reason. And I'm going to give you just two examples of how to do that today. So let's go down to a daily chart real quick. We could even go to a 4-hour. It doesn't matter. The objective or the idea is going to be the same. But in general, what I'm looking for in these situations are pullback opportunities. The scale of that pullback is going to be different depending on the time frame that you're trading. Here on the daily chart, you can see that price action again broke out of this wedge pattern. What I would be looking for is for the bullish movement to become a little bit exhausted, for us to get some relief, a pullback, right? Starting with the highs of our wedge pattern here, which almost coincide with the tail of this red candle right there. Look for a little bit of relief and then catch the next extension up. If you're doing this from a lower time frame like a 4-hour, then you're going to have more places, right? This becomes the newest structure high that was broken. This becomes the most recent outside return. And now this becomes the kill zone, or as some say, a kill zone. Ha ha ha, my name, Akil, kill zone, A-K-I-L, just add one more L, you get it, right? This would be the area in which we look for the pullback and that extension, right? But we're not here to talk about that today. We're here to talk about profit target taking. So again, in a normal situation, we would look for a previous level of structure. I say the thing, look left, structure leaves clues, and that's where we shoot for. But we don't have that in this situation. So this is where we want to use our other forms of analysis. And hopefully if you are a technical trader, then you're not a one-trick pony. You do have other ways to analyze the market. And the first way I'm going to talk about is going to be price action based, price action and price action tool based, like you say. The second way is going to be indicator based. So what I want to do here is I want to analyze the market the same way I would if I were a counter trend trader, right? So this is where you hear me say, think like the other trader, meaning that if I am a trend continuation trader, I'm looking to hop on the trend and ride that next extension up. If I am a counter trend trader, I'm trying to anticipate where that next exhaustion point would be. Now, structure is a main component of that, but there are other things that we use specifically in that CTS system to help us make that prediction as well. I'm going to throw a few at you right now. One is going to be a harmonic move or a one-to-one measured move. This is often referred to as an AB equals CD pattern. I'm going to take the length of my previous extension, right? Because this extension is still going, this is still kind of in progress, so it hasn't completed yet. So this is my previous extension, this swing low right here, down here, to this swing high. And what I'm going to do is I'm going to copy and paste that. And I'm going to drag it to our previous retracement, which is this low right here. And that's going to give me a one-to-one measured move. That's also going to give me an AB equals CD pattern, all depending on what type of terminology you want to use. Now, I can supplement that with bringing on a Fibonacci extension as well. So I'm going to take my Fibonacci extension tool, drag it from that same swing low to that same swing high, that A to that B, and back down, and you can see I'm going to get a series of Fibonacci extension levels. Now, there's 4 of them on there. Only 2 of them are really relevant. Others are there for pattern stuff. But the two that I'm paying attention to, and these are the two extension points that I will predict price to go to, is one, the 1272, or we call it the 127 Fibonacci extension, and two, the 1618. You can see the 127 lines right up with our AB equals CD pattern. The 1618 is a little bit higher up here, and we can combine that with something else. Now, I mentioned earlier that we had a breakout of a wedge pattern, this guy right here. There are many ways to look for profit taking off of wedge breakouts. There's the length of the flagpole. One way is also looking for an equal move, equal extension of the range of the pattern. So what is the range of the pattern? The range of the pattern is the lowest low of the pattern down here, the highest high of the pattern right there. I'm going to make this a different color just so it stands out. And if we have a breakout of the equal range, I'm going to do one more thing here. I'm just going to steal this line and draw it to the top so I have a point to anchor this onto. Right? If we have a breakout of an equal range, that's going to put us right up here. And you can see this one-to-one measured move at this equal range breakout is right around that 1618. So if you're someone that's looking to take targets and you're looking to do other forms of analysis, right, pay attention to the confluence levels that happen between our AB equals CD pattern and our 127 and our equal range break in our 1618. So the next way of exiting is going to be indicator based, and this is a more active way. So in the previous example, we're kind of, identifying those target levels well in advance, putting limit orders there, and then once price hits that level, boom, we're out. This next way is going to be very similar to what we do with our active trade management, where we're allowing price action to move and then we're making our decision based on the close of the previous movement. And for this example, I'm going to use my RSI indicator. I've done this with the stochastics as well. But pretty much we are looking for price to go into those extreme conditions, right? So if you're new to the RSI, this is the relative strength index. It is a volatility and momentum indicator. If there's a lot of buying strength, it goes up. If there's a lot of selling strength, it goes down. And every once in a while, there's divergence, which is another lesson for another day. But pretty much this is an oscillator, meaning that it has, it works between the numbers of 0 and 100. And there are certain levels on the relative strength index called oversold and overbought. Now, the default version that you'll probably have on your chart, if you were to line it up, would be 70 for overbought and 30 for oversold. I have mine's a little bit tweaked. I have an 80 for an overbought and a 20 for an oversold, mainly because in how I trade, I want to look for those extreme conditions. Like I say all the time with indicators, right? The default indicator setting is probably not going to be the most efficient setting. So I always recommend playing around with whatever you're doing. That doesn't mean following the 80 and the 20. You can try 85 and what would it be? 85 and 15. You can go less, you can go more, right? Play around with it while you're in that testing phase to find which way kind of optimizes your trading. But pretty much what we're doing is we're waiting for that indicator to go into an extreme, and that's either going to be our exit or exit once price action goes from that extreme back down into the normal area, right? So I'll show you some past examples because we can't do it on this one yet. But again, the type of trade we're looking for is a pullback and then an extension, and we're asking ourselves, okay, well, where the heck do I exit here before I lose money and price goes against me? And let's just take a look at the last few examples I see on my chart. We'll take this one right here. We'll take this one right here. We'll take this one right here. You can see as price comes from a pullback, right? And this is an area where you would get involved in a pullback, right? The RSI goes up, 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 up as price goes up. And eventually we get to a point where we have gone overbought. Again, my overbought is 80. You can see here my RSI. If you look on the right bottom hand of your screen, my RSI is at 80.24 on this candle. So this would be the candle. I'm looking for an arrow tool where I know you're here somewhere. I can never find you. There we go. This would be, this is where price action went overbought. This would be my exit, right? And we'll kind of revisit this in in a little bit, because I know what you're saying. Well, Keel, this is not at the exact highs, and that's a lesson for a little bit later. Let's take a look at this next one as well. Again, let's pretend that, hey, you were someone that saw this extreme, you entered on a pullback trade right here, you're riding this up because at the time, these were all-time highs as well, and you're asking yourself, where can I get out at, right? So price action is going, and then right here, actually, this is where the RSI went oversold, so this would be your exit. Again, it gave you a little bit of a retracement after that and then went a little bit higher. But remember that our job as traders, we're never going to catch all of the move. I think that's something that I know that's something that gets many traders in trouble. They want to buy at the very lows, they want to sell at the very highs, and that's just impossible. The truth is, we want to get as much as we can comfortably and safely get out of a trade before we put ourselves at more risk of sabotaging our profits and having it turn back to break even or a loss. So that's one way to do it. Another way would be not just waiting for the RSI to go, and this could be the stochastics as well, right, to go overbought, but wait for it to hook back into that situation or hook back into the normal situation. So let me just see if I can find an example for you right. Where's one where overbought for a while? Oh, here's a good one. Look at this. So you can see price action went extremely overbought in this scenario. This would be a perfect example. If you were going to exit the trade as soon as price action went overbought, you would have been exited right on this candle right here. So again, not a bad move, right? You got involved in a pullback down here. It extended up a little bit. You made some money. But then you're looking back and you're like, man, Akil, this thing kept going all the way up. Well, right, if you exited on the hook back below this overbought line, you would have survived all the way until about right here, this red candle. You see, you could have made more on the move. Now, again, there's pros and cons. Before you get so excited about this is why you have to test. There are going to be situations like this where you can make a little bit more money, right, by waiting for that hook back below. But if we look at the first two examples we had, if you would have waited for that hook back below, you actually would have left some money on the table, right? Here was our exit for the overboughtness here. The hook back below came right here on this red candle. Boom, right? This one, right? The close of that one right here, which you can see is below the original exit, right? So again, we don't want to get, I've worked with a trader in the past who got so big-eyed over and excited over catching the big move. And I remember having a discussion where we were looking at his trading stats and I said, hey, you know what? If you consistently get out at a smaller level, although you don't get that big win that gets you all excited and super proud of yourself, you would actually make more money by completing more profitable trades at a lower profit level than less profitable trades and allowing yourself to give back more money to the market, but have those big home runs. And it's, he didn't end up wanting to listen to me, but he came back like 6 months later and said, Akil, you were right. And I'm like, I know, well, I didn't say that, but you gotta figure out that journey on your own. So that's another way to do it as well. And there's many other tactics. There's the parabolic SAR. You can use like some type of volatility band, like a Keltner channel or a Bollinger Band, and say, hey, once price action closes outside of that extreme, that's my idea to exit, or my clue to exit. I don't even know if that is, let me see what's on here. I'm rambling now because, again, these videos aren't rehearsed and I'm still bitter about the USA losing. But here's an example of that right here where price action, if we're taking the Keltner channel, which you guys can't see. Give me a second here, guys. Hit that like button while I'm filibustering and trying to make stuff more better for you. Such a professional video, right? If we take a look at this, let's make these things white and just, there we go. Let's make the lower one white, and there we go. You can see something like waiting for price action to trade outside of a band or close outside of a band. This would be exactly the same one as the RSI. You can see the other extreme up here as well. Would have gotten you out a little bit earlier, right? But those are things to experiment as well. The point of this video is that, if you are someone that has that question where it's like, hey, I want to be in a trade. I'm not maybe an investor who I'm looking to just buy and hold forever. And I'm looking for a different tactic aside from just active trade management, where price has to literally go against me before I can get stopped out because, you know, I'm leaving too much money on the table. These are two methods that you can try. You can try to think like the other trader method, where you're using different forms of technical analysis to predict those points. Or you can use something like an indicator to kind of just give you the best idea of when the market may be exhausted, when you should get out. And then you can always look to reload for the next opportunity that price pulls back. So apologies for the unprofessional video. I feel bad about it, but I want to get a video out for you guys because I feel even worse if I don't get a video out for you each weekend. Hope you got something from it. If you did, hit that like button. It's going to make me feel a lot better because I do really feel like this is a poor video. You guys comment all the time and say, hey, it's better than you thought, which is good. So do that and I will be happy. I will see you guys next week with more random videos throughout the week, more Trading Coach podcast episodes, and of course, another Trading Edge video. Until then, plan your trade your plan. Take care. I'm going to find a box of tissues and cry because we're hosting a World Cup in 2026, and I'm pretty sure the USA is going to get eliminated in the group stage.
Wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.